Supergroup focuses on fleet management, supply chain logistics and car dealerships.
Right, we put this one on the list of stocks because it's one of Rowan's favourite in the whole market. So we had to give him a chance.
This is just another left field. I was wondering where the food element is in Supergroup.
I'm sure they moved some food somewhere, but it's also an exciting company with some global footprint, Europe, etc., etc.
All right, we'll just leave it at that. We've got a market cap of 15.3 billion rand, no dividend yield, price to earnings ratio 14.6. We've discussed this at length on different occasions.
Yes.
Big recovery story, and it's now pretty much a solid player in its space.
I think the most recent sort of moves that they've been making is diversifying their income globally. So the most recent set of results, 60% of their earnings are actually now from offshore. Anchored by SG Fleet in Australia.
How much of their earnings from offshore?
60% of operating profit, yeah. So substantial. And they've diversified away from that South African base, which they sort of reinvigorated.
So a good rand hedge.
Yeah, I think it's to some extent best of two worlds, because we have seen quite a strong recovery sort of in domestic stocks until recently, I guess, and then continued growth globally. So you've got this sort of good balance and hence a good share price.
So I like all of that. I like the European business in time and all of that sort of thing. So that's all good. The one bit that worries me is the car dealership business here. How big is that? Because we know cars are not selling well at the moment.
Yeah, so it's interesting. They actually bulked that up because they bought Sandown Motors Western Cape operation. So it has increased. It's about 12% of earnings. It's not too substantial. And in fact, in their recent set of results, earnings were very defensive. Their market share had gone up, so their new car growth was better than the overall market. And these motor dealership businesses have diversified away from the cyclical businesses that they were by doing a lot more services and parts.
True.
So that makes them more defensive than they were.
Can we get the graph up while you guys are chatting?
Yeah,
because there we go. That looks very good.
No wonder it's his favourite stock.
No wonder it crept into the food services discussion. Let's just put it in there. All right. But again, the question comes, can it deliver further growth from here?
Yeah, I think so.
Or further value, rather.
Yeah, so it's not overly excessively rated. Management continues to do value-adding acquisitions, so we're still seeing the annualization of some of those acquisitions. SG Fleet, which was done very well in Australia, recently did an acquisition in the UK now. That's on the back of another acquisition they'd done, NLC, in Australia. So the continued annualization and the good sort of judicious use of debt, I think, continues to underpin.
Hot or not, Rowan?
Hot.
Paul?
Yep, we can give it the thumbs up. Great management team. Well done, Peter Mountford. Continues.